Good morning, this is the Phoenix Blue update on Wednesday the 29th of March, brought to you this morning by Tom Colley. Okay, Article 50 is the big news today. Theresa May on the government will effectively press the button. Article 50 will be issued and the process for the UK to leave the European Union will begin. The timing of this is somewhat uncertain, although my best guess based on what I've read is that she'll go make a statement that in Parliament, and at the same time the ambassador to the EU will physically present the letter to the head of the EU activating that Article 50. So that's the big news today. We'll go on in a moment and look at the chart for the pound and talk about what the possibilities might be there. But before we do anything else, just run through yesterday's news and what we've got ahead today. Well, yesterday the only really news we had was on the dollar. We had the consumer confidence index came in at a very strong 125.6 as against the forecast of 113.9. And also previous of only 116. So they were actually expecting or anticipating a fall in consumer confidence since the last time the measure was available. What we've got in fact is not only a rise but a substantial rise. We did potentially see that somewhat reflected in the dollar, but we also had some Trump intervention which potentially is more significant, and again we'll have a look at that on the chart in a moment. So what's ahead today? Well, FOMC member Evans speaking at 2:20. There's been a lot of Fed speeches. Even Janet Yellen spoke yesterday. I know some calendars showed that as a high-risk event, and some calendars didn't show it at all. As it transpired, there was nothing she said whatsoever about monetary policy. So potentially those that we're not showing that were correct. We had a lot of other speakers, sometimes at very specific events. We had last week, we had comments specifically about children and their wealth picture going forward, which led to a lot of speeches, none of which had any influence on the markets as we see it. But one to be cautious of there, I've had a look at that event and it has the potential for FOMC member Evans to say something which could be significant. And then also this afternoon we have crude oil inventories with the obvious effect that could have on the Canadian dollar, which is predominantly been, or both the crude and the Canadian dollar have been predominantly ranging over the last few days. Okay, so back to Brexit Article 50 and over to the pound chart. We'll start here today. First thing I'd say is that this is a known event. We know that Article 50 is going to be issued. We've known that for a considerable while. We've known that Article 50 would be issued today. We've known that for a considerable while. So my argument in this context is that the market will have already taken account of that. It's a known. There is no uncertainty. There may be an initial reaction, but my own feeling is I'll be looking for opportunities to enter long in this market once we've had potentially a pullback when the event occurs. I'll be looking to do that small risk because obviously there's uncertainty in this market, and I would suggest that if you are interested in trading the pound today, you do it at lower risk, bearing in mind what is happening. Yes, I've got a logical reason why I don't think the pound will fall dramatically. I actually had an order through here at about 1.24. It triggered in overnight. I woke up this morning and I wasn't expecting the pound to have fallen that hard. I moved my stop to break even because it had pulled away from there. It subsequently come back and closed me out at break even. So I'm comfortable with that. I didn't want to be in that position at this moment in time through the day. But as you can see from the chart here, not only we've got that level through there, but we also have a retest occurring of this triangle formation. So there would be potential in the scenario playing out that I'm thinking about, where we get a move to the long side and then looking for a pullback to an intraday level to take that further long through the day. Okay, over to the dollar. Well, the dollar had quite a recovery yesterday. We'd had a rejection of this trend line through here on the dollar index around the 98.50 level, something in that region. Yesterday we had a really strong recovery. That came late in today. Yes, we'd had some strong consumer confidence numbers out, but the thing that seemed to move the markets and stimulated the markets late in the afternoon UK time was President Trump effectively repealing some of Obama's climate protection policies. His argument for this is that it will allow energy industries, particularly coal and gas, to be reinvested in. Any government land or government-owned or controlled land can now potentially be opened up as mining or gas exploration, which it previously wasn't. So that was very much based on jobs growth. When we have a look at the S&P, we'll see that stocks rallied on the same basis. The timing of that, if you're a cynic, could be that obviously we'd had this downward move through the end of last week when Trump was unable to repeal Obama's other big issue for him, which was what they call Obamacare or healthcare. He couldn't get that through Congress. Even his own party wouldn't support that. So that was very, very negative for him. The markets did perceive this an inability to get things done, and that might potentially have an effect on his fiscal stimulus in terms of tax reduction and infrastructure spending. But we've had that move. Level through here, 99.75 is a bit of a key level for me. I'm still bullish the dollar, as long as we remain above this bullish trend line. Clearly, at this position, the dollar's not as strong, or I'm not as bullish in my outlook as I was when we were up here. However, if we could get a break above that 99.75 and a return back to the long side, with the potential for highs around here, and this head and shoulders formation finally disappearing, we might consider that until we get a break above that 99.75, we potentially are simply getting a retest of this neckline zone through here in the meantime. But as I said, because we've rejected this upward trend line here, my bias will remain long and looking for that break above that, and then looking for the opportunity to take advantage of that dollar strength. Over on the yen, we saw another bullish move reflecting that dollar strength through yesterday. We'd had about 2 weeks of almost continuous yen strength to the downside on this chart. My next level on here is 111.60. I'm looking for a break, close above that, and then potentially to look to this to the long side. This chart does, however, give me, because of this channel in conjunction with this level through about 109 through here, we could potentially see a further retest of that bullish trend line on the dollar index. And that would potentially give us an entry at the confluence of the lower side of the channel here with that level. Over on the euro, well, through Friday we had this bullish move through here, although it's somewhat of a high test pin bar at this point. We've got a trend line coming down through here, a downward trend line this time. Yesterday, particularly through late in the day, we got this clear bearish bar here. We've closed below this 108.25, 108.30. which I see as a key level through here, being again the potential of, in this time, the inverted head and shoulders formation. So we will be looking for further downside in this market. Key level there for me is 107.65, something through here in this level. Again, that would correspond with the level we talked about on the dollar index, with a view to that invalidating any chance of this inverted head and shoulders playing out. So we've come back to trend lines on the euro and the dollar index. We've tested those. They've been rejected, so we still have our dollar strength euro weakness bias in place. We're now looking for that to play out in order that we can take advantage of it. Okay, next over on the Aussie. In this market, I've got a clear box range marked in here. I have trade entries at both sides of those. These are limit orders with a normal 40 pip stop. Potential looking for price to come down to the bottom to return to the top, targeting the top, and vice versa from the top, targeting the bottom. In this market, we've seen again the dollar strength having an effect. This market has remained relatively bullish relative to other currencies in recent times. We had yesterday the Aussie, and to be fair, to the similar extent, the Kiwi were resisting that push on the dollar late in the day to a greater extent than, say, the pound and the euro. I have a intraday level through here at 76.13. I'd be interested in price coming back down to this level in confluence with the bottom zone of this channel here, with a view to taking this back to the top side with a target or an objective similar to the longer term trade from down here being the top of my box range there. I mentioned the S&P 500. We had a significant pullback. We had again rejected this level through here at 2340-ish. Also, potentially, this is the bottom of this channel through here. Are we going to see a return to the phase one of this Trump trade, which is effectively the long move we had post the election right through here? I'm looking through, to be fair, probably next week for a break of this high here to create a new record high, and then a pullback into this 2380 level here in order to take that back to the long side. Okay guys, so that's it today. Article 50 is the big news, but as I've said, because it's a known quantity at a known point in time, I don't personally think we'll see a lot of downside to the pound in that respect. Not a lot of other news today other than crude, but we are running into the last, tomorrow and Friday being the last 2 days of the month and the last 2 days of the quarter. So potentially, if you have had a successful month, a time to be cautious and not give back any of your profits, and a time to be cautious if you haven't had such a successful month, in that not making that situation worse in markets where we're likely to see unusual moves or end of month moves and profit taking. Right, the next free trading event, when you get the opportunity to trade alongside the Phoenix Blue fund managers, is Tuesday the 18th of April in London in the afternoon. If you're interested in that event, pop onto the website, go through the contacts page. You'll get a pop-up in a moment which will allow you to do that, but the web page is there. If you like these videos, please subscribe to them. Again, you'll get another pop-up offering you that alternative. Okay, thanks very much for listening, guys. Have a great day, and we'll speak to you in the morning. Take care.